In this video, a Tesla retail stock investor agrees with another Tesla retail stock investor and has a message to Tesla from Tesla retail stock investors. Hey Tesla, I hope you're listening. And I know this is going out on a limb, but I have a funny feeling around 99.9% of the people watching this video also happen to be retail Tesla stock investors. The other 0.1%. Angry keyboard warriors currently living in their mum's basement who hate Elon Musk and just watch the video so they can say that Elon's a fraud and I'm an idiot. I love you guys too. So, if you happen to be a Tesla retail stock investor, probably all of you, it's definitely worth paying attention. If enough of us can kick up a stink and get Tesla's attention, I do believe we may be able to influence some of Tesla's decision making. The company genuinely does care about us retail stock investors. And just before we get into this super important video, some breaking news, a special announcement. I've never mentioned this before, but I actually have a Patreon page as well. I can't even say that with a straight face. But in all seriousness, guys, you really are missing out. I'm dropping crazy amounts of videos there, most of them too spicy for YouTube. So if you're not already a member, join Patreon with the card in the corner or the link at the pinned comment and thank me later. 171 exclusive videos and counting, plus up-to-date access to my Tesla stock price targets and optional access to my Tesla valuation model as well. What are you waiting for? You guys remember Tesla boomer mama, right? Alexandra Mers. This could be a recurring thing in the future. All breadcrumbs lead to Tesla's share buybacks. And by the way, I absolutely have not made any sneaky edits to this article that are super inappropriate. If you notice anything that you think, there's no way Alexandra wrote that, she's so proper. She doesn't even like Stephen saying f***. Oh, by the way, I'm sure Alexandra will see this video, so I assure you, I'll do my absolute utmost not to say f*** too many times, because I know every time I say f***, your ears bleed, so I'll do my best, Alexandra. But nobody's perfect. So if you see any things that look like, hang on a minute, Alexandra definitely didn't write that, you're imagining it, this is totally unedited, I swear. Or how to make Tesla retail investors and employees bust nuts before the year end. This is going to be good. What would you do if you had enormous amounts of cash available right now? Yes, maybe. Hey, baby. Long story in joke, I'm not explaining that. You would consider buying Tesla shares at $222. Especially if you have confidence in the executive capabilities of the company to achieve its targets in the coming months and years. Share buybacks are an ideal way to return wealth to the shareholders of a company. We have just finished celebrating the long overdue credit rating upgrade of Tesla to investment grade by S&P. Moody's didn't even have the time to catch up. No surprise here. I'm sure most of you caught my recent video with the S&P credit upgrade for Tesla and my speculation about this potentially opening the door to Tesla share buybacks. And here we are already talking about the next hot subject, potential share buybacks by Tesla. Let me address why this all intertwines. The ideal timing, the typical way of execution, which, just jumping in here, is something I should have explained a little bit more clearly in my video discussing this, my bad. I didn't realize everybody didn't know. Sometimes I forget that I live in a bubble and assume everyone knows everything I already know. So sorry about that, but we'll talk a little bit more in detail and show how other mega cap companies have implemented similar strategies before. Follow the breadcrumbs. An increasing number of market participants has been advocating for share buybacks since late spring 2022, notably Leo Koguan, the third largest individual share hodler of Tesla, and Gary Black, one of Alexandra's low-key investing crushes, don't tell her husband, managing partner of the Future Fund, whose Future Fund EFT has Tesla as its largest holding, increasing its allocation most recently up to 13.4%. When asked at the annual shareholder meeting in Austin in August 2022 how Tesla plans to use its capital in coming years, Elon Musk said that, quote, a sort of share buyback is possible, depending on what Tesla's future cash flow looks like. Look out for these words in what follows. Whilst the upgrade to investment grade of Tesla by the S&P was long overdue, the timing of the release on October 6, 2022 was more than surprising. Nothing obliged the rating agency to take action on this particular day. This is super important, as I speculated in the recent video. This came out of absolutely nowhere, unless you follow the breadcrumbs. More on that, I'm sure, to come. Especially since prior delays of rating actions have always been explained by the need to see sustained business and financial performance going forward, and usually happens after earnings calls. Again, this is a very important point. We really do need to follow the breadcrumbs here. This out of the blue credit rating upgrade, it's suspicious, to say the least. So why would S&P act a fortnight prior to the earnings release of Q3 2022 and base it on production numbers only? In there, I can't stress this enough, enthusiastic press release, and by the way, that is a fair point. S&P views Tesla, quote, more favorably because it continues to demonstrate market leadership in electric vehicles with solid manufacturing efficiency that supports strong EBITDA margins and sustained positive free operating cash flow. The improved view of Tesla's business supports its prospects for solid and sustainable free cash flow over the next few years. In 2022 and 2023, we expect Tesla to sustain free operating cash flow to sales of over 10%, backed by industry-leading EBITDA margins of roughly 20%, compared with our upside trigger of 18% and well above our 10% threshold for above-average margins for automakers. They continue to praise Tesla, its engineering prowess, and even acknowledge that Tesla's autopilot and full self-driving technologies could sustain and improve its competitive advantages as it continues to make progress developing its FSD capabilities and remotely updatable artificial intelligence software. And that is a direct quote, and this was the jaw dropper for me. S&P describing Tesla's software as artificial intelligence because one, it's true, and B, they actually said it out loud. There's about a 0.0000001% probability they came to this conclusion on their own versus having had some conversations with Tesla relating to the potential issuance of debt, more on that later, and potential share buybacks, in my opinion. Haven't heard enough yet? Let's continue. With over $18.3 billion in cash and cash equivalents at June 30th, 2022, and our expectations of solid cash flow at least through 2023, we believe Tesla will maintain its strong liquidity. Tesla appears likely to sustain its recent track record of free cash flow beyond 2024. S&P goes on to describe, quote, Tesla's annualized EV production and delivery run rate supports over 50% volume growth in 2022 and exceeds 2 million units of deliveries over the next 12 to 18 months. EBITDA margins are 18 to 21% over the next 2 years, which we consider well above average relative to peers. Again, there are no peers. People haven't quite figured this out yet. Tesla has no competition. They have no peers. Hence, for example, why their gross automotive margins are 2 to 3 times above most of the alleged peers. Capital expenditures are around 10% of sales, zero net debt, and annual free operating cash flow to sales of over 10% in 2022 and 2023. And continues, quote, we expect the company will proactively refinance or repay its minimal upcoming unsecured debt maturities, given its strong credit standing and available cash and cash equivalents, which totaled over $18 billion as of June 30th, 2022. The wording and detail of this report strongly suggests that there is now communication between Tesla's management and the rating agency S&P. Let's take a moment here. Absolutely agree, as I speculated in my video a few days ago. S&P, miraculously, is now not only recognizing what Tesla's doing, they're regurgitating Tesla's own talking points. The stuff that's been in Tesla's quarterly reports in their own terminology. They're highlighting the main key competitive advantages out of nowhere. It seems almost impossible to imagine a situation in which S&P miraculously came to these same conclusions and started using this same terminology out of absolutely nowhere, of their own volition. I mean, after all, where's the financial incentive? Where's the ROI for S&P to spend the time trying to understand a company they don't understand just to upgrade their credit rating? Usually that's not how things work. Usually large bags of money, at least the dangling carrot of a potential large bag of money, is what's required for a company like this to take a second look. More on that in a moment. Add to this Elon's tweet 5 weeks ago, which shows his respect, or lack thereof, with regards to S&P's principal competitor, Moody's. Moody's is a relevant, accurate statement. It is uncommon that a company would favor one ratings agency over a second one. Usually issuers who need debt accommodate all 3 major agencies. Please note that Fitch has never rated Tesla, even more relevant than Moody's. And S&P and Tesla had some important past beef to digest. The inclusion in the S&P 500 index in December 2020 was long overdue, as I discussed at the time, and months before. And the ejection in May 2022 of Tesla from the S&P 500... I've got to maintain my composure. Let's try that again. And the injection in May 2022 of Tesla from the S&P 500 ESG index is an obvious embarrassment for the S&P, by the way. It sure is. I mean, you guys know ESG, right? The scam of all scams. You know what the E stands for? Environmental. It's Tesla, the company that has probably done more for the environment, not only today, but into the future, than any other company on the planet by a significant margin. Single-handedly forcing the entire automotive industry to urgently transition to fully electric vehicles or go bankrupt. And they're kicked out of the ESG index because they don't virtue signal enough about irrelevant bullshit. And they don't implement enough racist hiring policies, enough discriminatory hiring policies. They don't hire enough token people to signal virtue to sit on their board. Instead, they just hire the most competent people for the job. As a result, no ESG index for you, Tesla. Alexandra is summing it up with her response, referring to the index as a scam. It sure is. So Elon and team may have just decided to apply the old Latin rule of divide and conquer. Not a surprise when one knows Elon's appetite for history. We can only speculate on whether communication is happening. S&P's press release does hint to it, and whether information has been exchanged which allows S&P to better understand the company and prepare for more. Other megacap companies did this before. Tesla may consider a strategy similar to the one Apple has been using successfully over the past 9 years. issuing debt to finance share buybacks. Apple got upgraded to investment grade on April 23, 2013. S&P rated Apple's debt as AA+, Moody's AA1, and Fitch followed suit a couple of days later with an A+ rating. You may be wondering, hang on, why the would 3 independent rating agencies almost all simultaneously upgrade Apple's credit rating? That's a bit weird, isn't it? Let's read on and find out why. All 3 ratings agencies were solicited by Apple to rate the company so that Apple could simultaneously issue a major bond to help finance an increased share buyback, which was initially announced to be $45 billion and then amounted to $100 billion in the next 2 years span up to 2015. Warren Buffett had long advocated this strategy. Apple's main reason for issuing debt for share buybacks in 2013 was to avoid the 35% repatriation tax of overseas profits if they were to use parts of their then $145 billion cash cushion. The Tax Cuts and Jobs Act in 2017 largely reduced this tax, and Apple announced its plan to pay $38 billion in repatriation taxes when bringing $252.3 billion in overseas cash back to the USA. And yet, Apple continued more recently its strategy to issue debt for share buybacks. Here's Apple's stock buybacks over time, and right below the debt issuance chart over the same time horizon. So let's have a look at these together and see if we can notice anything here. At the top, we've got share buybacks. Along the bottom, we've got net debt issuance. What are we seeing here? Apple uses debt to buy back shares quite aggressively starting around 2013. Apple is not the only megacap company to issue debt to finance share buybacks. Microsoft has done so from 2008 to 2017. Again, net debt issuance along the bottom and stock buybacks along the top. Here are the corresponding charts for Tesla showing share issuances, i.e. no share buybacks, and debt issuances, which have now nearly disappeared. The reason for the negative values along the top, instead of Tesla buying back stock, they're issuing more stock, diluting shareholders. And along the bottom, Tesla's net debt issuance, positive from 2014 to 2018, a little bit again toward 2020, and now negative, significantly negative. Going back to Apple, below is an interesting chart which shows how Apple reduced the number of outstanding shares from over 26 billion to now 16 billion. This corresponds to a reduction of 38.5% of outstanding Apple shares in the past 9 years. You certainly have no difficulty pointing to the moment in time, in April 2013, when the Apple investment grade rating was granted and bond issuance started. And a quick note here, so no one's confused. The lower graph is not quarterly growth of the company, but growth of outstanding shares. In other words, is the number of outstanding shares increasing, going up, or decreasing, going down? And look at this. Quarterly shares outstanding and year-over-year quarterly growth or decline in shares outstanding. Will share buybacks limit other projects? Good question. It is important to note that share buybacks are initiated after all other operating projects are funded. They are not a replacement of investments, e.g. new gigafactories, or research and development. A lot of people get confused about this. Oh, they need to research and need more factories. Share buybacks after all of that is accounted for. A company will consider share buybacks when the internal rate of return of purchasing back and retiring stock is larger than other financing options. It also sends the right signal to investors that excess cash is utilized in the best possible manner. Speaking of excess cash being utilized in the best possible manner, this would probably be an opportune moment to point out that all of my excess cash has been used in the best possible manner that I was aware of over the last 6, getting close to 7 years, by buying Tesla stock with every spare cent of my excess cash. If I've figured this out, if I've figured that Tesla stock reasonable risk-adjusted ROI, I'm sure the actual company itself is also aware of the potential of buying back some of its own stock. Gary addressed it in this tweet, taking into account that a possible refinancing might cost today 5%, which is still significantly lower than the 23% return projected in 2030. And here's Gary's tweet. If you want to read it, pause the video. What are the advantages of share buybacks coupled with debt issuance versus just buying back stock with your actual cash balance? 1. Share buybacks coupled with debt issuance show that management is confident in the company's long-term prospects and believes the stock is currently cheap while financing conditions are acceptable. This exact same strategy was announced by Apple at the Q1 2013's earnings call when they reported their first year-over-year earnings decline in a decade and provided fairly bleak guidance, yet CEO Tim Cook sounded optimistic about the company's financial prospects. For Microsoft, the simultaneous issuance of debt for stock buybacks coincided with the beginning of the global financial crisis. It's understandable for investors to become frustrated when a stock's price drops significantly. I find it hard to relate, although I do understand, but I can't relate. I'm literally licking my lips. The lower Tesla goes, the happier I am. Bargain of the century, in my opinion. It's quite amusing when the Tesla Q trolls come to point and like, oh, Tesla down, you're an idiot, you lost all your money, loser. And I'm like, bro, it's on discount. You should be there when it's really high. Going, no, sucked in, man. It's not a good deal now. Sucked in. What are you going to buy now? It's going up so much, you idiot. Each to their own. However, if Tesla were to plan a large share buyback, there is a silver lining. The cheaper the stock is, the more shares Tesla will be able to repurchase and retire, thereby boosting future earnings per share whilst not decreasing the cash position. Bingo. How does it technically work? A company can execute stock buybacks at any given moment in time, with the exception that firms are restricted from repurchasing their shares for 2 weeks before the end of a quarter and for 48 hours after releasing earnings. No shareholder consent is necessary. The board of directors has this authority alone. A stock buyback occurs when a company buys back its shares from the marketplace, usually by missioning one or multiple brokers to execute the share repurchases. They can also be attended to corporate stockholders, but that's much rarer. The effect of a buyback is to reduce the number of outstanding shares on the market, which increases the relative ownership stake of the stakeholders. This is a super important point, so let me explain this in a little more detail. I currently own approximately 0.000643059% of Tesla. Were Tesla to buy back more shares, my ownership stake would actually increase without me needing to buy any more shares of Tesla. This is a very good thing. This will move me incrementally closer to my eventual goal of owning 0.001% of the entire company. Long way to go. As stocks trade in part based on supply and demand, a reduction in the number of outstanding shares often precipitates a price increase. Therefore, a company can increase its stock value by creating a supply decrease shock via a share repurchase. Share buybacks can help companies reduce the dilution caused by employee stock option plans, and this is an important point to understand. Over time, new employees join the Tesla company and existing employers get their stock options. That actually creates new supply, diluting all existing shareholders. So unless a company is actively buying back shares at the same time or in the future, by default, existing shareholders will constantly get diluted. In other words, your ownership stake, your percentage of the company that you own will actually decrease over time. And here's a point I'd like to see Tesla get to ASAP. At least enough share buybacks to more than compensate for all the new stock issued for stock-based compensation. Gary Black summed it up well here. To caveat, the price was pre-split, Gary's tweet. What's nice about buybacks? They can be turned on and off opportunistically. If FUD hit and Tesla dropped to $700, give or take, which would be $233 today, Tesla could heavy up the buyback. When it's surging, Tesla can scale it back. Buybacks don't compete with growth initiatives. They compete with M&A and cash buildup. Why now? First and foremost, the current stock price represents an excellent opportunity to buy an undervalued stock, according to Alexandra. I totally disagree, and that's why I haven't been buying Tesla stock with every spare cent. Second, the SEC, also known, I believe, as the Short Seller Enrichment Commission. No, the suck Elon's can you guys let me know, what does the SEC stand for again? I forgot. The SEC is actively working on changing the reporting rules for share buybacks. Up to now, issuers typically disclose repurchase plans or programs at the time that the share repurchase are authorized by the board of directors. This announcement typically just announces the maximum amount desired without giving precise details of timeline. Most share repurchases are then executed over time through open market purchases. Issuers are not required to, and typically do not, disclose the specific dates on which they will execute trades to an announced repurchase plan or program. Investors and other market participants normally do not become aware of an issuer's actual share repurchase related trading activity until they are reported in an issuer's periodic reports, long after the trades have been executed, which is a good thing. If the stock market knew in real time that a gigacap company was buying back stocks, the amount of short-term traders that are trying to get ahead of this to make a quick buck, pile into the stock, and cause insane volatility would be out of control. The SEC wants to change this to daily reporting. This could get interesting. Third, doing a share buyback before the year 2022 ends would not have any tax consequences for Tesla. This will change next year, as on August 16, 2022, President Biden signed the Inflation Induction Act of 2022 into law, and one of the provisions included an excise tax of 1% on share buybacks. The new rule goes into effect for repurchases after December 31st, 2022 that are valued at over 1 million. So breadcrumbs are pointing in a very interesting direction. And doing share buybacks would immediately increase the value of stock for investors, including Elon, and employees. How much? In mid-May 2022, the stock was then hovering around $235 split adjusted. Leo Koguan has called the numbers of $5 billion of share buybacks in 2022, followed by a second tranche in 2023 of $10 billion. He confirmed this week when the stock had fallen to similar levels. Here's his tweet, quote, "Averaging on the way up and down as long as the thesis on Tesla remains intact. I am optimistic because Tesla will both buy back $5 billion now and or double its earnings in Q3 and Q4. And then a quote from Warren Buffett, "Be fearful when others are greedy, and greedy when others are fearful." My assessment is that the amount of the share buyback in 2022 should be much higher. we may never see Tesla in the $222 range again and should take advantage of the current favourable market and regulatory conditions. I tend to agree. Now, the caveat here, of course, Tesla does need to be able to sleep well at night. And what I mean by that is to have enough access to their cash and future debt to cover every possible emergency scenario, except, of course, complete and utter extinction of the entire human race, in which case, well, all bets are off and not much to worry about if we're all gone. But I definitely agree this is the perfect moment for Tesla to be as aggressive as they possibly can. I would be fine if Tesla took on multiple tens of billions of dollars of debt to finance share buybacks. Whether or not they would do this, not up to me to say, but I'd like them to. Of course, you are talking to somebody who personally is carrying over $2 million of investment-related debt. I've been carrying debt, not this entire amount, but I initially began carrying investment debt back in 2010. It's only grown over time, but you know it's grown even more over time? The assets that debt was used to purchase. See where we're going with this? It's important to get this right. Tesla is a money printing machine. The biggest problem right now is spending their money. And hello, the most obvious low-hanging fruit is right there. Share buybacks. As I've said a million times, as far as I'm aware, Tesla stock is currently the best risk-adjusted opportunity in the stock market. You'd think if that was true, Tesla the company might buy a little bit of their own stock back. Hey Tesla, are you listening? In closing, let's continue to follow the breadcrumbs. I hope this has clarified exactly how share buybacks might work, some examples historically of companies like Apple and Microsoft doing their own share buybacks via the issuance of debt. And it does seem the breadcrumbs are leading to a very decent probability that Tesla is actually setting up to buy back some shares. I'm going to go out on a limb here and say the probability of Tesla announcing a share buyback before end of year, somewhere between 42 to 69%, about a coin toss. Given the 1% excise tax coming into effect next year, given how dirt cheap I personally believe Tesla stock is at this point in time, I'm leaning closer to 69% probability than 42. Let me know what you guys think in the comments below. How likely is it that Tesla will announce a share buyback before the year's out? And now the big question, ladies and gentlemen, what can we do to turn that 69% probability into 99% or even higher? Well, it's pretty simple. Hassle the out of Tesla. Tweets, emails, everything, everyone, all of them. Tweet at Elon, tweet at Martin. Sorry in advance, Martin. Scream from the rooftops. First, to get Tesla's attention. Second, to get a comment. Or third, for them to say absolutely nothing at all because they're already planning on doing the share buyback and they don't want to say anything until they've done it because they want to buy as cheap as they possibly can, in which case we might find out after it's happened. But in either case, as I said at the start of this video, from one Tesla retail investor agreeing with another to all Tesla retail investors watching, if you think this is a good idea, you need to let Tesla know. Do you guys support a share buyback? If so, how much? And if not, let me know your reasoning for that too. Finally, don't forget, join Patreon with the card in the corner or the link at the pinned comment. Gain access to, what is it now, 171, I think I said, exclusive videos and counting, my Tesla stock price targets, and loads more. You really are missing out. So click the card in the corner or the link at the pinned comment to join Patreon, and I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you want to support the channel and instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. And if you're still watching, you're awesome. Please let me know your thoughts on today's video in the comments below and click the card on screen now to watch the next video.